before I ask for the first question, I'd like to take the other privilege of asking the first question myself. All three presentations talked about the fact that there is now extensive competition in the market, and that perhaps there always has been extensive competition in the market. So the question is, why is it that there's a general perception that there isn't?
One of the reasons is, after the wake of the financial crisis 2007, a lot of focus on prudential stability, making sure the crisis didn't happen again. There were then a wave of mis-selling scandals, a lot of concern that the industry, and Antonio touched on this in his speech, lost sight of the customer, as it were. A lot of CEOs have said, you know, it's a problem. And at the same time, the industry did become more concentrated because different groups did merge together. And that all ended up into a sort of political debate about, well, market share's a problem, competition's a problem. And the government, as I said, has focused on a whole load of different measures to promote competition as a solution to that. But competition is a good thing. I mean, there's no one in banking who's against competition. There is a lot of competition out there already. But I think it really is the mis-selling scandals, and people thought, well, actually, that's a lack of competition. The banks could take advantage of their customers and get away with it.
When I arrived to the UK almost 8 years ago, that's something which I studied in depth, because I was a bit surprised with that channel perception, and it was not my experience having worked in Brazil or in Portugal or in Spain. I found the UK retail market extremely competitive, and therefore I found it a bit strange that people had this channel perception. And when I studied it further, out of need because of the Independent Commission on Banking, I came to some very interesting conclusions. And I find out the following. First, because people confuse concentration with lack of competition. And the fact that the industry is concentrated has nothing to do with the fact whether they are competitive or not. I mean, Anthony mentioned a very good example of supermarkets where you have only a few and they are fiercely competitive. So concentration, if you look throughout the world, you have very concentrated markets which are very competitive. The UK is a case, and I'll tell you why. And you have very concentrated markets like, for example, France, or like, for example, Spain. And France is not so competitive, in my opinion. Spain is a bit more competitive, but both have much higher prices than the UK. Again, when you look at concentration, in my opinion, the ICB failed to analyze some important things. First is that the market is not only made out of banks. If you look at IFAs, financial intermediaries, there are significant products in the market like mortgages or insurance or investments where around 50% of the market is served not through the banks but served through intermediaries. And the banks are not more than, like the supermarkets, white label if you want suppliers, but who controls the customer is the intermediary. And you have 11,000 intermediaries in the UK. So if you took intermediaries into the equation, the concentration argument would disappear. On the other hand, for example, and as Anthony mentioned as well, when you go into the savings space, for example, branches are not very significant, and 30% of savings are done through the internet. And in that case, concentration is completely irrelevant because people move money over a click. You see, so that is the first thing which I thought is a wrong perception, confusing concentration and wrongly defining concentration in the UK market. When you look at prices, and there are numerous studies from the European Commission, the prices in the UK retail market are the cheapest in every category, I believe, except in one product, which I believe is in credit cards. But if you go across all studies, all products, the UK comes out of the 27 countries systematically as the cheapest, which is a very big indication of competition. And the third factor, which I think is very important, is to look at return on equities. There are no excessive return on equities in UK banking, at least over the last 6 or 7 years. And fourth, just to add a fourth, I don't like to give more than 3 reasons. When we had to sell TSB or RBS had to sell William & Glyn's, there was no industry interest in terms of trade buyers. So I am very surprised at a market where people say there are abnormal rents from a duopoly or oligopoly. Nobody wanted to buy 5% of the UK retail market or 6% in the case of SMEs in William & Glyn's. So those questions should be answered before people speak about lack of competition. On the other hand, because when normally there is fire, when there is smoke, there is some fire, I do believe that in SMEs it is different. I think in SMEs there is much less competition, and in my opinion that comes from the fact that contrarily to, again, Portugal, Spain or Brazil where I worked, the SME customers in the UK are by nature single bank. They only have one bank. So while in retail people have 3 or 4 current accounts and they can change from providers much easier now with the 7-day switching mechanism, SMEs by tradition have one single bank. And I think that is a barrier to competition, and I think they should have more choices in order to enhance competition on the SME market.
It's a sort of thing that you latch onto. I think especially in times of globalization, with this sort of, fierce world out there of these big globalized corporates, you want to assume that there's something wrong with the competitive forces, and that's our way out of the situation. But if you really wanted to make banking more competitive, you'd have to go along a road which the advocates of competition would really dislike, which is you'd have to remove the regulation. So the place where banking is not competitive is the fact that banks have not been allowed to go bust, right? I mean, that would be the real test in the marketplace, wouldn't it? Of a truly competitive environment. And the problem why we don't have as many challenger banks as we could have is because, as Anthony was saying, is the costs of entry are very, very high. And it's just not an attractive investment proposition to get into. So my problem with the competition argument is it doesn't really square the whole thing. So if you really want to go down to a competitive market, you should be arguing for less regulation, whereas actually what's being argued for is more competition and, by the way, more regulation at the same time.
Hello, Daniel from Banque Populaire Caisse d'Épargne in France. I would like to ask you how you see competition when you have a market, an industry where 90% of your work is stock. You already have it in your balance sheet, and the next years you will have your result. So your brand, the competition, all of this is what is in the future, but not in the immediate. And for a CEO of a bank today, he have to get motivated to fight on this subject because he already has 90% of his result will be done by the stock. The second thing is, Anthony, you mentioned the competition in the market, but my feeling is competition is in local market. But after the crisis, we see less and less banks going to attack foreign countries. So isn't it a fake competition in the way that you have competitors who are small, who don't have the ability to really fight on your market, and regulator also do not, you mentioned it, encourage to go on foreign market because it's seen as very risky. We have so many disasters in Greece and other part of the world. So and shareholders doesn't like it today. It's much more, and most of the advertising in France, I think UK is probably the same. Is I operating in my country. I get my money, the money from people from my country, and I invest it in my country, in UK, in France. So how can you have competition if you don't have major operator that can come to compete with you from foreign countries?
Your first question is very interesting as well, and it is another difference that I found in the UK market versus the Spanish or Portuguese market or the French market, as far as I know, which is, as you said, in Spain, Portugal or France, your back book is a very significant proportion of your stock of your brand, in close to 90%, I would agree. But in the UK, that is not the case. The UK, in the retail market, given the trend over many years for banks to offer discounted offers to customer, that has led customers to churn more and more the products as the introductory offerings mature, and the fact that is now mortgages turn over every 5 years and deposits turn over every 2 years, to give you an example. So the front book in the UK is much more relevant to your future profits than what is the case in Spain, Portugal or France. And I would argue that is a strong incentive for competition because the market share you gain today is a much bigger proportion of your business.
It's absolutely true that since the financial crisis, there has been more retrenchment in a lot of different countries. I mean, most countries around the world, a lot of banks have retrenched to their national markets. I mean, the most extreme example of that is in Ireland, where they've basically all become national banks again. And that does have an impact on competition. In retail markets in the UK, not so much. I mean, we do have foreign banks that operate in retail markets like Santander, but not enormously. In the SME market, it's been a lot more prevalent in that there were a lot more before the crisis, a lot more foreign banks that entered the SME space. We are, and the work we've been doing with our members and with the government, would like to see the reversal of this balkanisation, as it were. I mean, ultimately, we want to get back to a position where banks can compete a lot more globally across borders, across barriers, and so on and so forth. There's a lot of prudential issues around this in terms of regulation, as has been pointed out by Mervyn King. Banks are international in life and national in death, and that's why regulators have ended up effectively putting up a lot of barriers around their jurisdictions that have made it more difficult for banks to compete across borders. But international competition is a good thing. We welcome it. Half my members roughly are foreign banks. I mean, largely operating the wholesale space, not retail space. But actually, hopefully we'll get to a position where banks will ultimately be able to venture across border more again in future.
Hello, Anna-Maria Cowling from Seahor & Co. I wanted to go back to the point of technology, because Anthony mentioned that the real game changer was technology, and that 60% of transactions would be done over the internet. How does that tie in, Antonio, with your strategy of the local presence in a world where branches are going to be completely or less relevant than they have been in the past?
Right. Well, I completely agree with that. First, I have to tell you that although I already work in banking for 27 years now, I'm hearing about the branch disappearing since then, and they are still here. They are still here. So I think it will be a slower movement than people think, and that is obviously tied up as well with higher life expectancy, etc. So new segments emerge, but the others continue. But what we have done to adapt ourselves to that is the following. So we are now in the last year of our 3-year strategic plan. In August last year, I have changed the organization, and I have created a global digital area that no longer sits in the retail division, but now is a global area that will, if you want, go across all divisions of the bank in order to, number one, develop the digital agenda that we are developing very well in retail, to develop it as well in insurance, commercial and wealth. And secondly, to have that area with the maximum visibility, allocate resources centrally to that area, and allow them 1 year to prepare the next 3-year plan that we will be announcing to the market for the period 15-17 with time. So we have designed the organization in order to tackle that opportunity and or threat in the best possible way. And we will be during this year preparing a full plan. And I think we are the only bank, at least as long as I know, that has now digital as a global area independent from retail, because for the reason you mentioned, there are some conflicts between retail and digital as well. Third point, I think that going forward, as you said, branches will change significantly their role. I see transactions which are commoditized as being able to be done more and more over the internet or phone or through mobile banking. And therefore the branches will have to evolve into the more value-added products, the human touch, the relationship, the advisory and the regulated products. Because in the UK, again, contrarily to France, Spain or Portugal, the fact that you have regulated products implies human intervention. So that is a factor for having branches. So it's a bit different as well. So I see branches evolving in their scope because of what I told you. I think branches will also evolve in size, given what will have to happen to transactions. So probably we'll have much smaller branches in terms of your country presence, but maybe you'll have bigger ones in the big cities. Again, because of the UK characteristic of the regulated products. Because if you don't have, to give you an example, a mortgage advisor or an investment advisor, you cannot provide those products to customers. So that implies that the HR management, so the human resources management, is very different in a regulated environment than it would be on a free market like in Spain. That's why in Spain you have branches with 4 people In the UK, it's very difficult to have branches with less than 9 people, you see. But so the branches will clearly evolve, and I fully agree with you. And we, I believe, are going to prepare ourselves more and more for that, because we have done very well in the digital area on retail, and we now have digital as a global area, as I told you, in order to tackle the next 3-year plan.
Antonio, you used immensely frequently the 2 words of customers and brand in your earlier talk, and that was incredibly refreshing. And thank you for doing this, and probably immensely beneficial to the sector. I had a question about strategic brand management. A bit earlier, Brian said there will never be a relationship between a bank brand and a customer, and Apple and their product and a customer. And therefore, if that sets a limit to what a brand can mean and do in banking, how do you strategically think about brand management, the role of brand, resources to be put behind the brand? Where does it stop? Where does it finish?
When we've had this conference in previous years, at some point, someone, a branding expert, gets up and says, you know, the problem with banks is they need to be more like Apple, or they need to be more like Google. And I said, I don't think banks are ever going to be like Apple or Google. I don't think that customers are ever going to get as excited about getting a new savings product or a mortgage as they are about buying a new iPad. So I think the discussion on branding in banking has to go down a different road. So it has to kind of work out what the core values of the bank are, and what are the things that are really going to sort of tap into the mindset of a consumer when they're out to buy a new insurance product or a savings product or a mortgage.
I could not agree more with what Brian said. The way I look at it is the following. I think banks, given the regulatory dimension, which in a sense protects banks, like Brian said, have not worried a lot about customers, and they have lost the focus on the customers, especially in the Anglo-Saxon world, over the last 15 years. And that was partly related to the crisis, as I mentioned in my speech. But I do believe that brands are very important, as I told you, and that what banks have to do is to change the attitude of looking at customers as products. In the UK, for example, if you look at the ICB, for example, the Independent Commission on Banking tells you that markets are products, which I strongly contested. I mean, you are not mortgage products. I mean, you are consumers who may need a mortgage once or twice in your life. You have savings, you have a credit card, you need a debit card. You are segments, right? Segments of consumers are people with homogeneous needs and that like the same type of offering from a provider. In the UK, for example, the information is orientated in such a way that you look at products, you don't look at customers. It's a bit paradoxical. When you look at the corporate sector, you look at SMEs, you look at business banking, you look at corporates. You look at retail, you look at current accounts, you look at credit cards, you look at mortgages. You don't look at wealth space, affluent, mass markets, which is the way we are changing our information internally in the bank to look at customers. So what I mean about this is the following, and I agree with Brian. While Apple or Google, and focusing on Apple, they define the consumer need through a product, and you have a product interaction, we have a relationship with people through their life and through their life cycle, which is very different. That's exactly why we have to look at consumers as segments and not as products. And I do think that banks have to go back to that. We are just, as I told you, resegmenting our customer base to look at customers and have segmented offerings for different segments and see what they need through their life cycle. What young people, for example, need is for sure not saving, right? They need, in the beginning, as you know, most young people need access to the housing ladder, for example. When you go on just doing through a life cycle segmentation, when you're getting to the 50s, 60s, then most of your needs are about retirement, about how you use your pool of money in order to protect your life expectancy. So we have to look at clients as segments, and that's exactly what we are doing. So I do believe that the fact that people interact with banks constantly although, as Brian says, each interaction is not critical for them and does not have you, if you want, the appeal of a product from Apple, our interaction is constant and therefore much deeper. That's why, contrary to what people might think, and maybe not because it happened already, I think the future of an Apple is much more in question than the future of banks.
One
As it
last
happened
question before we break.
Because other competitors may come and, you know, and provide something new, and the need may disappear. And the relationship between banks and people is something which lasts for 1,500 years and will last probably forever.
Could I ask, do you think the next banana skin for banks is the role of data and the customer data that you are collecting on transactions electronically, and how you are going to use that data? Because there's a significant financial opportunity for the banks in this area. We've heard Barclays recently talking about selling its data to other parties. I'd be interested in the panel's view on this particular banana skin following all the issues we've seen in the States recently and Mr. Snowden, etc.
For sure, you're going to see mishaps with data. We've seen some already. I mean, and this is not just true of banks. This is true of basically the modern digital world. So you can take, you know, masses and masses of data out of an office on a little stick. And Edward Snowden's done it for the benefit of the US government. And so definitely, yes. I mean, banks are definitely putting into place lots of security measures on this. And it really goes back to the people you employ, doesn't it, as much as having the security in place. But will there be lapses? Without doubt. But on the second point, yeah, is there new things to be done with the data in terms of exactly the things that António was saying, understanding the market segments better and people's buying patterns better, definitely. And there is also, yeah, examples of where that data can be sold on to third parties. It has to be done rather carefully, doesn't it? If it's a high street bank doing it, but there's certainly opportunities there.
There's been quite a lot of comment recently that the banks don't use data as much as other sectors, and in particular, a supermarket example again, that actually through loyalty cards and so on, they've got enormous databases on their customers, know a lot about their purchasing habits, and they've managed to do that in a way that hopefully, I'm not an expert on supermarkets, but hopefully benefits customers. But also they've done it without any real sort of banana skins mishaps in the supermarket sector. And the banks probably will end up using data more. It's up to each individual bank and their business model doing that. But obviously they'd have to abide by all the data protection regulation which is there and is indeed getting stronger both at an EU and UK level. But if supermarkets can avoid banana skins in that area, then hopefully banks will be able to as well.
Yeah, I would just add that in our specific case, we want, as I was saying, to be a relationship bank more than a transactional bank. And what we want to focus is on retail and SMEs in the UK. Therefore, we will take everything in that space with a lot of caution, because what we want is to serve our customers in the best possible way, and we are not on the transaction business in terms of those type of products. So I don't see ourselves entering on that space.